And good afternoon, everyone here in the room and the people who are joining via the live stream. My name is Jurjan Klep, and I'm Senior Vice President for the division Europe Branded. And I'm with the company for almost 25 years, during which I had several commercial and general management positions throughout the group in various places around the world. And during the next 15 minutes, I will give you an introduction to the division that I've been leading since January 2019. And what I hope you will get out of this presentation and what you take away is that the European business is a strong business and built on strength. And strength because we are the European leader of cigars with a strong brand portfolio and a strong market position in the key markets. Strength because we have delivered strong financial results and further potential for market share growth. And thirdly, strength because we have been successfully integrating Agio and that made us a stronger business with further potential to leverage on pricing and brand leadership. And I will show you several examples throughout my presentation how we're going to deliver this. But let me first give you the highlights of the division. Europe Branded is primarily a machine-rolled cigar business. About 3/4 of our revenue is generated by machine-rolled cigars, and about 17% by smoking tobacco. We contribute to 35% of the group net sales and about 30% of the group EBITDA. And what you can see on this slide is that we have been able to grow profits since 2018. And with a strong performance through the first 9 months of 2021, we already outperformed the full year performance 2020. And you can also see that we have a significant uplift in 2020 that followed the Agio acquisition with a substantial growth in net sales and EBITDA. And let me show you why the Agio integration made such a positive impact on the business in Europe. Because Agio did not only make us more profitable, it also was almost a perfect fit for STG, both on the marketplaces where they were strong and the brands. And when we took over Agio and closed the transaction in January 2020, Agio was a Dutch cigar business, family-owned, with just over 3,000 employees and a turnover of close to 1 billion Danish crowns, mostly generated in Europe. And this slide shows how Agio had a positive impact on our market share positions in the key markets in Europe. And that the brands Meharis, Panther and Balmoral actually contributed very well and fit into the portfolio of STG. And what I'm personally very proud of is that we have been able to integrate Agio into STG by keeping our market share and net sales stable, and at the same time we have been capturing the synergies that we have been promising ahead of time. And with the Agio integrated into our business, we believe we have an unrivaled brand portfolio in the market, where we have 5 strong brands covering all relevant price segments. And the market shares that I showed on the previous slide are together and combined a market share of around 33% in our core European markets. And we believe that makes us one of the leading, if not the leading cigar company in Europe, with further potential to drive sustainable profit growth through pricing discipline, legislative changes, and also the trade partnerships we have in our key markets. And on this slide, we also show you the competitors. And you can see that some of our competitors are the large tobacco companies that have been in the industry for a long time. But the key competition is coming from the small and medium-sized enterprises, mostly family-owned, with local or regional strongholds. And we believe that we are in a good position to compete with these companies. And one of the companies that we have on the slide here is Mossi. And Mossi, and I'm sure many of you have seen the press release that we sent out last week with the announcement that we acquired the majority stake of this company in Italy. Mossi is a relatively new company in the European market. It has been the first company that successfully entered the traditional cigar market in Italy, and they became a challenger in a market that STG so far didn't have an opportunity to get into. And we believe with our muscles, our capabilities and our competences, we are able to grow and accelerate the growth in this most profitable part of the Italian market going forward. And moving from brands, markets and competitors a bit more to the general dynamic of the market in Europe. And historically, we have seen a volume decline of around 3 to 5%. More recently, however, we have seen that the market slightly improved. This is on the back of COVID-19, but also because big tobacco entered our market in a number of markets in Europe. And we therefore believe that the market decline going forward will be around 3%. It's also evident that we expect more regulation throughout the different markets in Europe. And I think Niels already mentioned that. And I think we have a strong track record in adapting to new legislation, not only making sure that we comply in time, but actually also to turn this threat into an opportunity based on which we can grow. And let me give you a few examples of this by doing a small deep dive in a couple of our markets. And let's start in France. France is one of the biggest cigar markets in Europe. We are leader in this market with just over 50% since the Agio acquisition. We have a strong portfolio with strong brands, with Signature, Maharis and La Paz, covering all relevant price segments. We have the largest dedicated cigar sales force. And an example how we have adapted to local legislation is the name change of our biggest brand, Café Crème, into Signature. And we did this in a way that we not only have been able to keep our existing and loyal consumers, we actually also gave us a platform from which we could grow further. We also have seen that big tobacco entered the French market with new propositions. And also here, we took that as an opportunity for us to drive further growth by going to the market with a proposition that not only actually could compete, but also now is outperforming big tobacco in this category. And that's because we have a better product and we have the focus and dedication to drive this growth. Moving a bit more south to Spain. Spain, for us, also had a significant impact from the Agio acquisition. The market share is almost 25%, but we are a challenger in this market. We have a strong portfolio with the brand Signature, Panther and Maharis. We have a competitive sales force covering the relevant channels and point of sales. And also in Spain, we have been successful in adapting to new legislation. And also here, the example of Café Crème is something we celebrate in STG, because also here we have been able to change the brand from Café Crème to Signature and creating a platform for which we can drive further growth. And I've talking a little bit about the way we split our markets. And what we do is basically split the markets between leader and challenger markets. And what you can see here that actually many markets in Europe we are leaders, we also have challenger markets. And the way we approach this market depends on the role and the strategy we give to the market based on their position. And you can imagine that when we are leader in a market, we actually focus more on pricing and driving profitability. Where in the challenger market, we are focused on market share growth. And the way we look at this is to evaluate if we can drive this market share growth organically or that it is better to buy our market share. And I think Mossi, and this is the product that we actually communicated last week, is a good example where we basically made the evaluation that for us, it's better to buy this share than to try to build and enter on our own. And when we look at this and further translate this into priorities, I think all our markets in Europe work with the same 4 priorities. And we basically divided them into 4. Accelerate pricing, simplify portfolio, win in winning segments, and win the key customers. And to what extent we drive these priorities in the markets depends on the position. And let me give you some examples around pricing. Pricing is our most important lever we have in our strategy. And this is based on the strong positions we have in several markets. We believe that with the excise increases we see in the markets, we create opportunities that can help us to drive pricing. And with this pricing, we are able to offset the total market decline. And the way we do this is by building capabilities and investing in insights to make sure that we take the right decisions about this pricing agenda we have. Secondly, a simplified portfolio, and I think Niels already mentioned this, that this is high on our agenda to succeed in. And you can imagine when you acquire companies and integrate portfolios, that drives complexity. You also have seen the slide with the many brands we have in Europe, and it is our task and our responsibility to make sure that we simplify this portfolio. And what we want is to have less but bigger brands. We also know that with the legislative changes we see in the markets, that our shelf space will shrink. And we need to make sure that we reduce the number of market SKUs, and this is also what we do. And thirdly, to support Graham in driving his efficiency in his factory, we need to reduce the number of pack and cigar formats. And all this we have translated in a strategy that we call Portfolio 2025. And in this strategy plan, we have a roadmap with initiatives that we have started to roll out this year. And then finally, winning segments and win the key customers. We still have pockets of growth in our markets. And traditionally, STG is strong in the non-aromatic, non-filter, more traditional parts of the market. We are actually under fair share in the more growing segments, filter aromatic. And this is also where we are investing in pricing and in distribution. And with the key customers and building their relationship, we believe we have a further potential to grow our market shares in these winning segments. And this brings me actually to the end of my presentation. And what I hope you have taken out of the presentation today is that we have a strong business in Europe, and that we have further potential to improve profits and market shares, both organically and via acquisitions. And with that, I'd like to hand over back to Jurjan.